Hello, everyone. Welcome to another episode of Firm Returns Weekly. This week, I'm going to have a look through the recent release of Slime 3K from TinyBuild, and then I've also got some discussion points on some reflections I've been having on my investment approach, having listened to a couple of interesting interviews. So I'll just share my screen and we'll get started. Right. So, as I mentioned, Slime 3K was released on the 2nd of November, which was Thursday. And it released in early access for $4.49, which included a 10% launch discount. So it'll be sort of $5, $4.99 when fully priced. I don't know whether when it comes to version 1.0 release, they might bump it, or we'll see. But as I'll get onto a bit later, the price here is pretty much in line with comparable games in this sort of genre. It's like reverse bullet hell, whatever. And I think Vampire Survivors is like which I said here is the big is the original game in this genre that a lot of the other games are sort of loosely based on. What's interesting with this one, I've played it quite a bit now. I'd say about 3 or 4 hours. It's really this game, even though it seems like it's a bullet hell type thing, it's all really down to deck management and an awful lot of strategy and just managing your inventory and trying to collect together the right kind of cards and level them up and all the rest of it. And that's what really determines how far you can get through the game and so on. So I think, as we'll get on to a bit later, this has been, because on the face of it, it looks like a big bullet hell type sort of Vampire Survivors like game where you're going around and just trying to survive hordes of enemies and so on. In reality, most of your time, like I think I just did level 4, so I'm a bit further into the game now, but the early levels are a bit faster. But level 4, I think I spent over an hour just on that one level, and it was because I think the actual live time where you actually moving around and thing was probably like 15 minutes tops, but most of the time, or 15 to 20 minutes, but then most of the time is actually just spent with the game like paused when you open a shop window and you're there trying to choose which cars to do and like locking some of them so they're there when you go to the next shop and it gets like regenerated a selection of items, and you're trying to like work out how you're going to try and order your cards so that you buy them in the right order so they're stacked up and you can get level up the cards and so on by grouping them together. So yeah, that's really where the art of the game is, and so I think some people were probably found that a bit unexpected. So there was a slight mismatch there between things, but I think the actual game itself is phenomenal. It's really, really good fun, and I think anybody that isn't going in with a preconceived notion of what the game is actually has had a really good experience with it. And I expect also, as I'll get onto, there'll probably be some rebalancing to make it maybe make the level progression a little bit easier earlier on for people who've been struggling, which seems to be what most of the negative reviews have been. People struggling to progress, but I played it myself, and I can definitely say that it's you can progress. It is, and it's not too bad. It just requires a lot of strategic thinking. But yeah, so what was also quite good is, so this is another game. Slime 3K is another edition in the Despos game universe from Confa Games, which is the developer, and that the IP, and I believe that I think it was an acquire hire, so the developers sort of contracted out. But yeah, the IP is owned by TinyBuild, so the margins on sales are going to be very high, even though it's only selling for $4.99 or $4.49 at the moment. After all the platform fees and everything out, what's left, they'll be taking a very high percentage of that, probably 70% or higher, I would guess, depending on how much what kind of arrangement they've got with Confa Games there. But yeah, so because that might technically end up being a kind of a second party title if they're still contracting out to them. But anyway, yeah, it was what was quite clever, I thought, was they bundled it together with Despo's game, so you could get like an additional 20% discount. So that means you, instead of just the 10%, and they did stack, you'd get 30% discount on Slime Through K if you bought Despo's game. And Despo's game was also at a 55% discount, but it's a quite, significantly more expensive game, because it sells for $8.99 even with that 55% discount. So if they're bundling the two together, and you really could see this in the figures that the sales figures for Despo's game, that they were selling sort of fairly in line with each other. A lot of people were taking advantage of this. They're capturing the sales of the upside from this. It's not just the profits from Slime 3K, they're also capturing the upside from Despo's game as well from doing that bundling together. So yeah, it's been that was a clever strategy, I think, and it's like I say, with Despo's game, the margins will also be very good because they own the IP for it. So yeah, very promising. You can kind of add, in a lot of cases, you can probably add those two together. And just looking at the sales rankings on in Steam DB and stuff, it does look like they sold fairly similar numbers. So more there obviously were more for Slime 3K certainly early on and so on, but they're selling quite nicely in tandem. And I think that's another bundle now with Spider Heck as well, but I don't think it has the 20%. Yeah, so they did that as a bundle. They're doing other ones, but I think that there's still the 20% additional discount or whatever is unique to if anybody that owns Despo's game. So there's people that are already either bought it before or in a bundle or whatever will benefit from it. That is how I bought it as well in the bundle. Right. So yeah, we got a few. The other thing to say is that the game was coupled into to publish to market the game. They've done a publisher sale on Steam. So we've had on the Steam homepage, they've got in the special offers section, which is just the second section down from the top, you've got like a rotated sort of banner of things at the top, and then you've got, which I think some people might have ended up seeing this on there as well, or I mean, I certainly saw a couple of points when I opened Steam. I did see, even though I'd already bought the game, I did see this advertised on like the rotate, the cards that pop up when you open Steam. There, it was in there front and center with Slime 3K as well, both on it. So don't know whether that was an additional thing they paid to out there, or Steam just does it or whatever. But yeah, I think for some people will have been seeing that as a targeted advert there. But yeah, this special offers section, I'm pretty sure for the entire run of this publisher sale, which is going from the 2nd to the 9th, so 7 days, a full week. And it's been, it's having this slot on the special offers section of the homepage for that whole period of time. I think it does rotate. As you can see, there's a few different pages here, but I think it does like rotate around a bit. So sometimes it's on the first section, sometimes it's on the second, and so on. But yeah, so it's getting a good, and it's driving a really good amount of traffic to it, as I'll show you in a second. But yeah, this is what the publisher sale page looks like, and it's really quite. You can see they've really done a good job with bespoke sort of artwork and design, incorporating all of the different things and really pushing the Slime 3K, which is shown right at the top. And then let me have a look. They also have a live broadcast section further down the page. I might just let me just have a look, see if I can get it up for you. Actually, just have a look at it live. They have a live broadcast section. Here we go. Yeah, so still live now, and we're on the 3 days into the sale. Still showing on the first section here, and I have checked as well in in a private window without any cookies and so on. So it's not just because I'm logged in or whatever. And it seems so you can see, yeah, they've got the big discounts on across their product range, and everything has been getting a boost. Like some of these unknown titles, some of the newer ones getting a nice boost as well. All the old, popular favorites, Streets of Rogue, Potioncraft, a more recent one, etc. All getting speedrunners, all getting good numbers in the sales rankings. Dead Side also doing well, and you Cartel Typhoon, etc. But yeah, you've got a bit further down. We have they've been running these live broadcasts. You can see that it's in earlier in the morning now and night in America and so on. So it's not such a peak time, but we can see they've basically just been streaming these games through this period. But as you can see, let's close that. They've at sort of more peak times, they've been getting over 1,000 viewers for each one of these games they've been showing in this stream. With sort of 1,500 here for Slime 3K and similar numbers for Dead Side and Potioncraft and so on. So yeah, really that the Steam sale and the publisher sale here and having being featured in the special offer section is really driving a lot of traffic to this page. Just a continuous stream, which is helping to just keep the sales numbers up. We've seen they dropped off a bit over time, obviously, as the number of as people who were interested in the game has been buying and so on. But yeah, it's just been like a sustained sort of fairly high level of sales across all of the games. And you can see this as well. Just skip down to it now. Unlike when we were looking at Stray Souls, for instance, where we had the initial look and they went, ooh, just drop straight down. Slime 3K has been really nicely doing sort of new highs each day after launch, and really holding up well through as we've gone into the weekend, several days in. So yeah, it's and I think the peak is 687 at the moment. I think that's still the peak, yeah. But yeah, really positive overall, and the Steam sales definitely having a really good impact on driving it. So I mean, what did I say here? So yeah, this particular game genre has become a pretty crowded field, so it's difficult for a new entrant to stand out. The release of the demo during the Steam Next Fest certainly helped increase interest, adding just over 1,000 followers, which equates to approximately, or just over maybe, 10k wish lists. But it's undeniable that the substantial marketing efforts we've seen post-launch have been a driving factor in early sales. So yeah, it was in not a bad position, 521st in the wishlist rankings, but I think it's definitely done a lot better in terms of sales and so on than it would have done if they hadn't had this big marketing drive. And I think they saw a similar thing with Punch Club, the original Punch Club game. That game wasn't really drawing a lot of attention. It was hard for it to stand out, but they knew that the game concept itself was really good and people would enjoy playing it. And so they had to push a lot more on the marketing. And they used, at that time, they didn't have quite as much clout as they have now to do these big publisher sale and all the rest of it, and get all the influencers and so on to play it. Back then, they used the more novel approach, which I've talked about in the past, of having a Twitch stream and getting the people in the chat to actually complete the game by voting on which actions to do and so on. So it was very novel, and they didn't actually release the full game until Twitch had actually beaten it. The Twitch viewers had beaten it. So not something they can just, they can't repeat something like that all the time. But now they've got a bit more clout. They're able to use things like a publisher sale here, which is really helped to drive interest in the game, and well, obviously helped across sales across the whole catalog, but definitely driven a lot more traffic to the game than it would have got if there hadn't been this kind of marketing. And they also have been sponsoring quite a few influencers to do videos on it. I'm not sure what the figures are now. This was just a day. This was all yesterday, so I'm guessing these are high now, but we've got quite a few that are sort of 50K or more views in just 24 hours. So, and all together, it's probably in the hundreds of thousands. And that will be driving a decent amount of traffic as well. And some of them had really gone into a lot of detail. This particular guy had I think he'd got all the way to level 10, which is the last level on it, so which takes quite a bit of work. So they really went into a good amount of detail with it. But yeah, that's certainly helped to drive things as well. So overall, it's been a real, I would say, marketing success. It's been a real case of it's been really good evidence of the marketing and general publishing capabilities of TinyBuild here. So yeah, I've been quite impressed overall just to see it and track it over the last few days, see how it's their strategy, how they've driven the sales and to Slime 3K and helped to push it up, and just across the board. I mean, I think I just sort of finally said. So I did say, yeah, the reviews at one point I called it sort of 201, number 201 in the sales rankings, but might have gone higher at some points. I don't know, but it's it was sort of in the low 300s or something when 320 here when I was writing this. And it was also, the reviews were 65.14% positive, so it'd still be classified as mixed. Out of 109, I think now there's like 156 or something, and it's gone up to 69%. So I think it is going to end up being mostly positive, and hopefully that will just increase as we go through the early access period. So when we get to the version 1.0 release, it will hopefully be something like, heading towards the very positive level, 80% plus or whatever. So but yeah, it's I think it's certainly nothing to be worried about. And like I say, you can just see from the player figures here, we haven't seen any major drop off, which is what you would see if the game was rubbish. and I've played it, and I know quite a few other people I know have also tried it out, and everyone's having a great time with it. So it is definitely a solid game. Yeah, and I think the substantial boost in sales we've seen across the entire portfolio is definitely going to help with the company meeting its cash flow targets for second half. So yeah, that's I think that's everything on Slime 3K and the publisher sale overall. So next thing to mention is I think I talked about it last week because we had the airing of the season finale of Welcome to Raven Brooks, which did very well. I think it that season finale was sitting around about 700,000 views now or something. Yeah, which is significantly higher than the previous episode, which was sort of around the 300 mark, I think. So yeah, really a lot of interest driven to that episode, and it was very good. And I just think overall the whole series has been great. So yeah, I was glad to see that do well, and come together and the quality in there and everything. And I think, and it's done well for Secret Neighbor, as we saw, and Secret Neighbor has been doing quite well in this sale as well. It was featured as one of the at a very healthy discount, as we talked about last week. And it's the traffic levels have been very good over the last week or so. But yeah, we also this week on the 31st, it was only just released on the 31st. I think it was like actually technically the first in the UK when it was released, but just came in the US and so on. We saw the release of the Halloween update, or patch number 9 for Hello Neighbor 2. And this was only on Steam, and I think that was perhaps a cause of frustration for quite a lot of the players, because the majority of the players of this game are using consoles, so they own the game on consoles. So having it limited to just Steam at this point has reduced the overall impact they could have had, and it was a slight shame because they'd built up quite a lot of marketing, quite a lot of momentum for the marketing, the build up of all of the release of the the release of the Welcome to Ravenbrook series, timed to coincide to end the weekend before this was released, and Secret Neighbor timed as well, and all these things together, all building up the hype and building up the momentum, and then it only releases on the least used or least played platform for this particular game, which is PC, and specifically on Steam. So yeah, I think I doubt that was their intention. I think it's probably more likely that they were intending to release across all platforms simultaneously, but there was perhaps some bugs or issues with the consoles and versions, and they may decide not to do it. And that's definitely the right decision. If you get to that point, and if they got to that point and they realized there were still issues, much better to delay it still than doing. But yeah, obviously it would have been ideal for everything to be all ready to go before then. So yeah, maybe the 31st October deadline was a little too close. I can understand why they did it. Chose that because it's obviously a really spooky update, and there's this little video here which you can have a look at to just get a quick couple of minute overview of it. But it's really quite different to it adds quite a lot to the game, I think, and I think we've seen a lot of positive, even though it's been more limited, the number of players on Steam. The people who have played it have been very positive. We're talking the last 30 days. That includes the period before the update as well, but I think the sales were lower then. It's been 88% positive compared to, I think, something like 74% for the overall game. So yeah, the reviews are definitely trending. Have been much higher since this update. So it has been very well received, which does bode well for when it does go onto consoles, that people will be very happy with it. But yeah, just a shame to lose a bit of that momentum because it might impact impact additional sales, I suppose, but it also players who currently own the game. But I'm sure that I think it's more likely they'll still try it out when it does release. But yeah, they might not be following it so closely. At that point, they might have been getting hyped up, and then what? It's not actually released. Anyway, but yeah, the right decision to delay it if there were issues. But yeah, anyway, it's in the past now. But yeah, let's moving on. So the final thing I wanted to talk about was just a touch on investing approach, or just philosophy, or whatever, investing philosophy. So I recently listened to a couple of interviews with Bill Nygren of Harris Associates that made me reflect on my own investing approach. I thought I'd share these. So I thought I'd share these reflections with you. Bill has been managing the Oakmark Select Funds since 1996, and he also manages subsequently gone to manage additional new funds that they've started up as well since then. Global Select and just Oakmark Fund, I think, are the other two. But yeah, they adopt a more traditional value investing strategy of buying at sort of 50 to 60%, but I think the threshold is 2/3, basically, so like 2/3 of fair value, and selling when it reaches 90%. They found this process takes 5 years on average, so they typically invest with a 5 to 7 year time horizon. I'm definitely aligned with this approach of buying below a threshold 2/3 of fair value, and preferably below 1/2. Depending on the company, however, I do think I'd be prepared to let it run a little if the stock got ahead of the fundamentals. So let it go beyond the 90% of fair value, or even 100%. For example, I'd probably assign a fair value to TinyBuild somewhere around the £1 per share mark, but assuming it got there in the next year or two, I'm unlikely to sell the shares because I see realistic scenarios where it could go far higher. I don't know exactly where my level is, but maybe somewhere around £2 per share, I'd look to trim my position. So yeah, this is just assuming that it doesn't take 5 years for TinyBuild, for instance, if it happened in the next year or two before the company had really released the full pipeline and we'd really seen that growth into a high valuation. I probably would still be consider hold on to it if I thought there was a lot of room left for the stock to run, and my thesis hadn't changed at that point. So the 5-year average is very interesting. I hadn't really put a minimum holding period on my investments before, but we'll be adopting 5 years from now on. So long as nothing is irreparably broken with my investment thesis, I will wait for this holding period to elapse before considering selling. The question is, what would break my investment thesis? Maybe I'll leave this for another post. So yeah, there's a lot of things there that could break your investment thesis, and it is going to be very dependent on each company, very specific to an individual company. So yeah, but yeah, I'll maybe think about that and put it into that and not to another place. But so next, move on to another bit. So fair value is often a moving goalpost, as the Oakmark Fund's own company is expected to grow their fair value over time, resulting in returns that exceed those of closing the discount alone. This can also mean they end up holding companies for longer than just 5 to 7 years, as by the time the share price reaches 90% of their original estimate, the fair value has grown. Crucially, though, they are very strict on selling a position once it reaches 90% of whatever they deem to be fair value at that point. As I outlined above, I'd be prepared to continue holding a company if it reached its fair value prematurely, provided there was the prospect of significant growth from that point. The other key takeaway for me here is to try and own companies that are likely to grow their fair value over time. A good yardstick is, will this business be worth more in 5 years from now? I think I've heard that somewhere else as well. But if you don't apply this rule, you're at risk of the discount closing due to a movement in the fair value rather than the share price. Having said that, there are exceptions in cases where the management of a potentially declining business has clear policies of returning capital to shareholders through dividends and share buybacks. Like if you think the company's going to pay back more than its market cap before it disappears from existence, then yeah, it's probably not a bad bet there either. But yeah, you have to have confidence that management's going to do that and not try and reinvest in a business that's declining. When it comes to calculating fair value, the models used by analysts at Harris Associates limit forecasts of earnings per share growth to 7 years, their investing time horizon, with emphasis on the first two. So they do when I say emphasis, they're doing like a full balance sheet, or they do also balance sheet, income statement, and cash flow statement. They like do the full thing, predict what they're going to be for the next couple of years, and then beyond that, they just do the earnings per share growth. Anything beyond this, they deem too unreliable to be factored into the valuation. While I don't think a model really helps with determining the suitability of an investment, anything that depends on the accuracy of a model is not cheap enough. I do see the value in forecasting out the full financials for the next couple of years as part of your ongoing due diligence. This is because it allows you to more closely monitor the company's performance and compare it with your expectations. The only issue is the time it takes. Realistically, I don't have sufficient time available to make and update detailed models for each of my holdings, so I'll have to keep any modeling to a more limited level. The good news is that I don't believe it's necessary for investment success. So yeah, I do think I want to start doing a bit more modeling, certainly for companies I'm considering buying. Well, like I say, actually, it's more a case of monitoring. It's for the ongoing due diligence. So yeah, it might be for newer holdings, something like that. But just having an idea of, I mean, some I wouldn't even bother wanting to do it. Like I've got some sort of commodity. I've got Eco Resources, quite commodity. Just completely at the mercy of commodity prices, really, for what the performance is going to be. So you just got to kind of think, you just got to look at it and go, do you think on average, could look at factor in sort of average estimated commodity prices going forward? Is it trading at a big discount to that, the cash flows they could get from that? And are they okay? Are they well capitalized enough to get through a period of lower commodity prices? And as long as you can get those two things, then that's what matters. I don't see much value in trying to forecast what the commodity price is going to be and so on, because they are very, very variable. Same kind of thing with the shipping rates of Taylor Maritime Investments. You just kind of look at it and go, is there a long-term kind of well, in the near term, they've got structural supply side factors that should hopefully increase the probability of rates going up, and can they survive? Are they trading enough of a discount to give you some downside protection, and are they able to survive a period where rates are lower? And so as long as you can get those two things, I think you're fine as well. And then something like Aviva, it's such a complex business that unless you really are on the inside, I don't know how useful a model would be anyway. There's so many factors going on in there that that would make it quite difficult to forecast anything realistically from the outside. I don't know, maybe some other people do, but I think that would be a bit of a waste of my time. Tiny Build would probably be a good example of something where it would be useful. Maybe Fuller's as well. Something, these ones that are a little somewhat simpler, or there's they have a bit more control over, or it's easier to predict the inputs that would be the variables in there that would be affecting things in the model. But because then you've got a better gauge of metric to actually measure their performance against. So I see the value from measuring performance against it. I think for more complicated, bigger companies like maybe Aviva or something, just checking their progress against the remuneration targets and so on in their performance targets in their executive benefits packages and so on is the way is a better way of just sort of monitoring the business ongoing, going forward and seeing if they hit those targets there. And then I don't think any of this stuff really helps with getting actually an initial investment thesis and actually seeing if something's cheap enough, because all that stuff should be really obvious from very basic metrics, and shouldn't really require a lot of detailed work to pull that kind of information out. So yeah, I do. I think the value of the models really comes in ongoing work, and I wouldn't want to be invested in things where it's like a short term. The thesis is dependent on a short term inflection or something like that. Whatever. I want to have something that that's gonna. There's a very obvious discount in place, and it can take and allow for up to 5 years minimum for it to play out, and just use any models or whatever to monitor it as it goes along. Yeah, if you found these reflections interesting, do let me know if you want to hear more of them in the future. And give this video a like, subscribe to the channel, etc. Go over and subscribe to the newsletter, all free. And yeah, I'll see everyone in the next episode.